On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's run through some of last week's key developments, then let's turn our attention to what's coming up in the week ahead. On Friday in the US, so this was early Saturday morning New Zealand time, we had Federal Reserve Chair Jerome Powell speaking at Jackson Hole, and that was a very highly anticipated speech. Obviously there's a Fed meeting coming up in September. He talked about the inflationary risks of tariffs as well as downside risks to the economy, even though it's proved resilient so far this year. But he did note that with policy in restrictive territory currently, the balance of risks may warrant the Fed adjusting its policy stance, i.e. reducing interest rates. So markets like that, Powell seemed to open the door to a rate cut next month, and we saw a rally in equities. We saw wholesale interest rates and bond yields come down, so treasuries rallied too, and we saw the US dollar weaken. So that saw US markets and international markets more generally finish the week on a very positive note. The S&P 500 in the US finished the week up 0.3%. That's its third consecutive weekly gain. The UK was stronger still. It rose 2% for the week. The FTSE 100 ended at new record highs, and the FTSE has actually risen for 16 of the past 18 weeks. So it's up 14.1% so far in 2025. It has outperformed most other markets. The only major market that has performed better is emerging markets, which are up 17.8%. But for New Zealand investors, because the currency has gone the right way for us in terms of the Kiwi dollar versus the pound, we've weakened against the pound. That 14.1% return from the UK market has turned into 17.5%. So it's been a very good place to be. EM, on the other hand, that's priced in US dollars, and since we've risen against the US dollar year to date by not quite 5%, but almost 5%, that has eroded that 17.8% return and turned it into about 12.5%. So the UK market proving very strong in recent times. Other markets, Japan took a bit of a breather. It's had a strong run of gains, so the Topix index slipped 0.2%. European shares added 1.3%. Emerging market equities fell 0.5%. Closer to home, the Australian ASX 200 was up 0.3% and the local NZX 50 increased 1.2%. That obviously came on the back of the Reserve Bank decision, which we'll talk about soon enough. We also had some good results that buoyed our market. So we're still down 0.5% year to date, but we're edging closer to moving into positive territory. So that is at least a positive step. Interest rates declined on the back of growing expectations that we'll see more central bank monetary policy easing in the months ahead. Obviously, the Powell speech and what we saw from our own Reserve Bank here fueled that expectation and that theme. The US 10-year Treasury yield was down slightly, finished the week just below 4.3%, and here in New Zealand, the 5-year swap rate, which is a wholesale interest rate, fell 6 basis points to just under 3.4%. Right, turning to some of the key events from last week, and here in New Zealand we did see the results of another global dairy trade auction. Prices did slip back marginally, but not a lot. The GDT index fell 0.3%. That was actually its first decline in 6 weeks. Prices are 6% below the 3-year high that we saw in early May, but they're still up almost 4% this calendar year. The currency moves have been a bit of a headwind. However, Fonterra did announce a slight increase in the payout for last season to $10.15. It was previously $10, so they've bumped that up ever so slightly. Still doing a few wash-ups, but that's a nice little uplift, and that is the highest payout we've seen of all time, $10.15 for last season. The good news didn't stop there. We also saw Fonterra tighten its forecast range for the current season, the 2025-2026 season. Before, they had a range of $8 to $11, and now they've tightened that up to $9 to $11. So they've lifted that bottom end of the range from $8 to $9. Still got a midpoint forecast of $10, but that narrower range and lifting the bottom of that range does point to more confidence in those estimates, so that's good news. So that was dairy prices last Wednesday morning. The big event for us was last Wednesday afternoon, and this was the Reserve Bank decision. Right, the RBNZ cut the OCR by another 0.25%. That was the 7th cut of this cycle, and it took the OCR to 3%, which is well down from the 15-year high that prevailed through 2023 and the first half of last year of 5.5%. So they've gone from 5.5 down to 3. That's a big move. More interestingly, the associated MPS, the monetary policy statement, was much more dovish than expected. So back in May, they had their OCR forecast track bottoming out at 2.85%, which is, of course, right in the middle of 2.75 and 3%. So it's sort of saying we might go to 3 or we might go to 2.75. We're not sure. We'll see how things go. But now they have cut that forecast track and it bottoms out at 2.55, 0.3% lower. So at 2.55, they're pretty much saying there's a very high chance we'll go right down to 2.5% for the OCR. So remember, we're at 3% now after last week's cut. In all likelihood, there's 2 more cuts to come that will take it down to 2.5%. The next meeting is in October. There's a good chance we'll see another cut then. Let's call it 70% chance, and then at some point over the back end of this year, maybe early into 2026, you'll see another cut and the OCR will bottom out at 2.5%. Interestingly, the committee voted to reduce the OCR by that 25 basis points that we saw last week, but 2 people off the 6-person committee actually wanted a bigger 0.5% cut, 50 basis points. So the RBNZ is serious about taking interest rates further down, and that is good for the economy, it's good for borrowers, and it's good for financial markets, which is why you saw New Zealand share prices, particularly from some of those more economically sensitive companies and some of those yield stocks, those high income dividend paying stocks, they all rose on the back of that decision. So quite a big week for the Reserve Bank and the New Zealand financial markets. We also saw the currency come off quite a bit in the wake of that. It sort of went back the other way on Friday after that Jerome Powell speech, but over the course of the week, we've seen the Kiwi dollar come down a little bit, and now it's trading in the high 58s against the US dollar. Right, internationally, it was August flash PMIs that were the key release, and these were really positive as well. They pointed to a global economy that continues to steadily expand. These are for the month of August, so very timely and hot off the press, starting with Australia, which was the first one to come out. That was particularly strong. The Australian PMI went from 53.8 to 54.9. That's the highest since April of 2022. The manufacturing sector was strong, the services sector was strong, exports rising, firms increasing staffing levels. So good news from across the Tasman. In Japan, similar story. The PMI rose slightly to a 6-month high. In Europe, it improved to a 15-month high. And there was lots of good news amongst the detail there. In the UK, up to 53.0, the strongest in a year. So look, you're getting the picture right. Everything is looking quite robust. In the US, which is really important, the world's biggest economy, the composite PMI rose to 55.4, which is higher than all of those other ones that I've just mentioned, and it's actually the strongest since late last year. So there were some inflation pressures that were evident in the United States and elsewhere, the UK as well. They actually had a CPI print that was quite a bit stronger than expected last week. So it's not all good news. There is some inflation pressures out there, but at least you've got a global economy that is looking robust and looking solid. Right, turning to the week ahead, inflation will be in focus. We've got the July PCE report due in the US, and we've got preliminary August CPIs to be released in Europe. So that will be in focus. Consumer confidence indicators also out for several parts of the global economy. The key one, out of all of that, I think, will be PCE inflation in the US. That stands for Personal Consumption Expenditures, and it's the Federal Reserve's preferred inflation measure. This is out on Friday, so we won't get it until Saturday morning, New Zealand time. Markets are expecting another slight increase. So the headline PCE and the core PCE both expected to rise by 0.2% and 0.3% for the month. That would mean that at an annual level, the headline PCE inflation rate is steady at 2.6%, and the core PCE inflation rate lifts a little bit to 2.9%, and that would be the highest we've seen since February for the annual core PCE inflation rate. So those things will be in focus on Friday, especially. On the local front, we've got retail sales for the June quarter out on Monday morning. Not expecting these to look particularly good. When you look at some of the recent indicators, things like electronic card transactions for this period do suggest it will look quite subdued. Remember, this is for the June quarter though, and the June quarter is probably the point of maximum pain for the New Zealand economy. Things are hopefully improving now, but in that sort of April, May, June period, things were very, very subdued. So those are out on Monday. We'll also get the latest ANZ Business Outlook survey. That is on Thursday, and hopefully that will look a little more encouraging. It's due out at 1 o'clock. Last month, headline confidence edged up to a 3-month high, and you also saw own activity that held steady as well. So things weren't too bad. Agriculture was upbeat. Construction activity was pretty weak. Inflation indicators softened a little bit, so we'll be looking for that update on how businesses are feeling and thinking here in New Zealand. On the corporate front, it will be another very busy week. We've seen lots of companies report in New Zealand and in Australia over the last week or so, and there's a whole heap more coming. Here in New Zealand, we'll hear from Chorus, Vector, EBOS, Meridian, Somerset, Port of Tauranga, so something for everyone in there. Across the Tasman, it does quieten down a little bit. Most of the companies reported last week, but there's still a few big ones still to come. Coles, Woolworths, Ramsay Healthcare, Wesfarmers. And on the international front, most businesses have already reported, but this week you will get the big one, Nvidia, the world's single most important company right now. They report on Wednesday. That's US time, so it'll be Thursday when we get it here in New Zealand, but very, very important, and that will be very closely watched. There's a couple of others too over the course of the week. You've got CrowdStrike, you've got Best Buy. On Friday, we've got Alibaba and BYD out of China. So another big week. Take it easy. Thanks for listening, and we'll talk again soon.
For more insights, visit craigsip.com.